Hello and welcome back to Express Econ Geofinance Insights. Let's talk about something big that just happened. Picture this, the world of traditional banking, a place that moves at the speed of, well, a bank. It's all about rules, regulations, centuries of doing things a certain way. Now imagine a company from the Wild West of cryptocurrency, Ripple, walking up to the front door of this establishment. Instead of being turned away, they get handed a key. That's essentially the news we're unpacking today. A major United States banking regulator, the Office of the Comptroller of the Currency, or OCC, has given Ripple conditional approval to open its very own national trust bank. This development is a massive step for Ripple, navigating some pretty choppy legal and regulatory waters. It's also a significant moment for XRP and for the entire cryptocurrency industry fighting for legitimacy. For so long, the conversation has been about crypto outside the system, a rebellious alternative to the old guard, but this move signals a major shift. It's less about rebellion and more about integration. Ripple isn't just knocking on the door anymore. It's being invited inside to build a new room with very specific, strict blueprints from the federal government. What does this mean for the average person investors and the future of how we move money around the world? It's about trust. Regulators are starting to see a path forward where digital assets can operate within the safety and structure of established banking. The government isn't just looking to ban or ignore crypto, they want to regulate it, bring it into the fold where it can be monitored, secured, and potentially used to improve the financial services we all rely on every day. The implications are far-reaching. For Ripple, this validates working with, not against, the financial system. It gives them tools to offer new services and build deeper relationships with cautious institutions. For XRP, this could unlock real-world use, moving it from speculative to a functional tool for international payments. For everyone, it marks a pivotal moment where crypto's disruption begins to merge with banking stability. Now, let's break down the official language, because conditional preliminary approval sounds like something you'd hear before a rocket launch. In simple terms, the Office of the Comptroller of the Currency has given Ripple a green light, but it's a green light with an asterisk. Think of it like being accepted into a university. You've got the acceptance letter, which is a huge deal, but you still have to graduate high school, send in your final transcripts, attend an orientation. The main hurdle has been cleared, but there are still important boxes to tick before the doors to Ripple Bank can officially open for business. This isn't a final, irrevocable charter just yet. So, what are these conditions? Ripple now has a period of up to 18 months to get its house in perfect order, according to the OCC's very specific rulebook. The company must demonstrate that it has everything buttoned up, from its operational procedures to its management team. It needs to prove it has sufficient capital, basically enough money in the bank to absorb any potential losses and operate safely. It also has to finalize its business plan, implement robust internal controls to prevent fraud or mismanagement, and satisfy the regulator that it can comply with all federal banking laws. It's a rigorous top-to-bottom examination to ensure this new entity is sound, secure, and ready to operate under federal supervision. This process is designed to be tough for a reason. Federal regulators are the guardians of the financial system's stability, and their primary job is to protect customers and the economy from risk. By granting conditional approval first, the OCC is essentially saying, "We believe your plan is viable. We see a path for you to become a regulated entity, but now you have to prove it." Only after Ripple has successfully jumped through all these hoops will the OCC grant the final charter and allow the trust bank to begin operations. When you hear the word bank, you probably think of a place with tellers' ATMs where you deposit your paycheck. But a national trust bank, which is what Ripple is setting up, is a different kind of animal altogether. It's important to understand this distinction because it's at the heart of what this approval does and does not allow. A national trust bank is not a regular consumer bank. It cannot take deposits from the general public in the way a Chase or Bank of America does. You won't be able to open a checking account or a savings account with Ripple Trust or get a mortgage to buy a house. Instead, a trust bank has a very specific and specialized function. It acts as a qualified custodian. Its primary job is to hold and manage assets on behalf of its clients. Think of it as a highly secure, federally regulated vault for money and other valuables. For centuries, trust companies have managed wealth-executed wills, administered trust funds for wealthy families and institutions. In the modern financial world, they are critical infrastructure holding trillions of dollars in stocks, bonds, and other assets for pension funds, investment managers, large corporations. They are the silent, steady guardians of the financial system's plumbing, ensuring that assets are kept safe and accounted for. For a company in the cryptocurrency space, this role as a qualified custodian is incredibly valuable. One of the biggest hurdles for institutional adoption of digital assets has been the question of custody. Large conservative institutions like pension funds and asset managers have strict rules requiring them to store assets with a regulated entity. They can't just hold millions of dollars worth of crypto on a USB stick or a third-party exchange with a questionable security record. A federally chartered trust bank solves this problem. It provides a legitimate, regulated, and insured place for these big players to store their digital assets, giving them the confidence they need to enter the market. So, the services Ripple's trust bank will offer will be tailored to this specific role. It will provide custody for digital assets, including XRP and other digital assets. It can facilitate payment processing, settlement services for its institutional clients, moving money and assets securely under a federal framework. Furthermore, it can act as the official reserve manager for stablecoins, holding real-world assets like United States dollars that back the value of a digital token. This removes reliance on a patchwork of third-party partners and brings all these critical functions under one regulated roof, creating a one-stop shop for institutional-grade crypto services. This approval is a monumental victory for Ripple's entire corporate strategy, which has been years in the making. From the beginning, Ripple has positioned itself differently. While some embraced a more anti-establishment, decentralized ethos, Ripple has consistently pursued a compliance-first approach. Its goal has always been to work with the existing financial system to partner with banks and regulators to improve, rather than replace, the infrastructure for global payments. This federal charter is the most powerful validation of that strategy to date. It's a formal acknowledgement from a powerful United States regulator that Ripple is a credible partner for the traditional financial world. The charter bestows a halo of legitimacy that is hard to overstate. For years, Ripple and XRP have been dogged by regulatory uncertainty, particularly surrounding the ongoing lawsuit with the SEC. While this charter doesn't resolve that specific case, it fundamentally changes the narrative around the company. It's difficult for critics to paint Ripple as a rogue operator when it is simultaneously working to become a federally supervised banking institution. This move helps build an immense amount of trust with the very clients Ripple wants to attract: large, conservative, risk-averse financial institutions. Moreover, this approval gives Ripple a significant degree of operational independence and efficiency. By having its own trust bank, Ripple can reduce its reliance on third-party banking partners for critical services like custody, asset management. This vertical integration means it can control the entire service chain, offering a more seamless and potentially cheaper product to its clients. For example, when facilitating a cross-border payment for a bank, Ripple can now not only provide the software, on-demand liquidity, but also offer the regulated custody for the assets involved. This creates a stickier, more comprehensive solution that is harder for competitors to replicate. Finally, this charter allows Ripple to expand its service offerings under a clear and unified regulatory framework. It's a passport to operate across the United States without having to navigate a complex and expensive patchwork of state-by-state money transmitter licenses. So, Ripple the company gets a big win, But what does this mean for XRP, the digital asset that powers some of Ripple's products? The impact here is less direct but potentially just as profound, centering on the key concepts of legitimacy, utility, market potential. First and foremost, the approval acts as a powerful antidote to the regulatory fear, uncertainty, and doubt that has long surrounded XRP. As Ripple becomes more deeply integrated into the regulated banking system, the perception of XRP as a risky, unregistered security begins to fade. the association with a federally chartered institution lends it a measure of credibility by proxy, making it more palatable for cautious institutions. This increased legitimacy directly fuels XRP's primary purpose: utility. The main barrier for many banks and financial institutions to use XRP for cross-border payments has been the operational and regulatory risk. How do we hold it? Who can we trust to custody it? Ripple's National Trust Bank directly addresses these questions. It can serve as the qualified custodian for XRP, allowing an institution to use Ripple's on-demand liquidity service without ever having to take direct possession of the digital asset themselves. A bank in the US could simply instruct Ripple Trust to manage the XRP leg of a transaction, completely removing the custodial headache and making adoption significantly easier. This boost in utility naturally leads to greater market potential. The value proposition of XRP has always been tied to its adoption for real-world use cases, particularly in settling the billions of dollars that flow across borders every day. If Ripple's Trust Bank makes it easier and safer for more institutions to use XRP as a bridge currency, then the demand for XRP will logically increase. Higher demand and transaction volume on the XRP ledger can, over time, create a more stable and valuable market for the asset. This isn't about a speculative price jump overnight. It's about building a solid foundation for long-term, sustainable value based on genuine functional use within the global financial system. Furthermore, this development could encourage a broader ecosystem to build around XRP. With a federally regulated custodian in place, other fintech companies, asset managers, and payment providers might feel more confident incorporating XRP into their own products and services. They could use Ripple Trust to custody XRP for their clients, knowing that the assets are held to the highest security and compliance standards. This creates a network effect. The more legitimate and easy it is to hold and use XRP, the more companies will integrate it, which in turn increases its overall utility and reinforces its position as a key piece of digital financial infrastructure. In the highly competitive world of cryptocurrency, this move by Ripple is like, a strategic masterstroke on a chessboard. It places the company in a very different position compared to many of its largest rivals, particularly major exchanges. Coinbase, Binance. These firms have historically focused on the retail market, building massive platforms for individuals to buy-sell trade. Their path to regulation has often been reactive, dealing with enforcement actions and state licenses. Ripple, on the other hand, has pursued a different prize from the start. Its focus has always been on the institutional market: banks, payment providers, corporations. A federal trust bank charter is the ultimate key to that kingdom. While an exchange might boast about its number of listed tokens or its trading volume, Ripple can now go into a meeting with a major bank and talk about federal supervision, qualified custody, bankruptcy remoteness. This is the language of institutional finance, and it gives Ripple a powerful competitive advantage in that specific arena. Ripple's move to become a part bank is guaranteed to send shockwaves through the traditional banking sector and the burgeoning fintech industry. For the old guard of banking, this development is a classic: if you can't beat them, join them, except the crypto firm is doing the joining. Some traditional banks will view this with suspicion and concern. They may worry the charter creates a loophole allowing fintech firms to enjoy bank benefits, allowing crypto firms to enjoy bank benefits without adhering to full regulations, especially consumer deposits and lending. This will fuel intense lobbying from banking associations. They'll demand a level playing field, same requirements, capital, liquidity, oversight requirements. A forward-thinking segment will see opportunity banks may partner with newly chartered crypto banks like Ripple's. Instead of building custody infrastructure, they could outsource to a regulated specialist and offer crypto services quickly and safely. Ripple's move sets a new precedent. It raises the bar for fintech. It shows a federal charter is a viable path to legitimacy and scale. While the conditional approval is a landmark achievement, it's crucial to remember this is the beginning of a new chapter, not the end of the story. Ripple has a challenging road ahead to secure its final charter. The company must now work diligently to meet all the OCC's conditions, a process that is both expensive and complex. regulators will be scrutinizing every aspect of the proposed trust bank's operations, cybersecurity protocols, backgrounds of its executives. Any misstep could delay or even derail the final approval, so flawless execution is paramount. This is a marathon, not a sprint, and the final lap is often the hardest. It's also important to understand the inherent limitations of a trust bank charter. This is not a golden ticket for Ripple to become a full-service, consumer-facing bank. The inability to take public deposits or offer everyday checking and savings accounts, meaning its direct market is confined to institutional and corporate clients. This is a strategic bridge into the established financial world, not a full-scale replacement of it. In conclusion, Ripple's conditional approval to establish a national trust bank is far more than a corporate milestone. It's a pivotal moment for digital assets. This development is one of the biggest steps toward bridging the gap between the innovative, fast-moving world of cryptocurrency and the regulated, stable foundation of traditional banking. It formalizes a path for crypto-native companies to come in from the regulatory wilderness and to operate under direct U.S. federal supervision. It's a shift from conflict to potential collaboration and integration. For Ripple, the charter is the culmination of a long-term strategy focused on compliance and institutional partnership. It gives Ripple a powerful stamp of legitimacy, a tool to build trust with risk-averse clients, and a platform to expand services under regulation. For XRP, the implications are profound. Easier, safer institutional custody and transactions could unlock real-world utility, moving XRP toward its role as a high-speed bridge for global payments. That strengthens the long-term case for value based on adoption, not speculation. The broader impact will reshape banking and fintech competition. Other crypto and fintech firms get a clear blueprint for legitimacy. Thanks for watching. Please like and subscribe to Express Econ Geofinance Insights, and drop a comment with your thoughts on Ripple's charter and XRP's next moonshot.